Okay, good morning once again, and thank you for joining this panel discussion on agency banking and mobile money development in Nigeria at Renaissance Capital's inaugural Nigeria Tech and Fintech Focus Conference. We will focus our conversation to dissect on-the-ground development in the agency banking space, as some players have raised tremendous sums of money year to date, whilst also trying to understand how this last-mile network can be leveraged to solve the merchant payment acceptance problem or other use cases for it in future, and how well the players can compete with digital-first companies and how they are positioning themselves for that inevitable future. We are pleased to be joined today by the CEO of TeamApt, Tosin and Eniolorunda, the CEO of e-Settlements, Olaoluwa Awojoodu, the CEO of Accelerex Holdings, Tunde Ogungbade, and last but not the least, General Manager of Mobile Financial Services at MTN Nigeria, Elsa Muzzolini. I am Adesoji Solanke, and I lead our frontier and Africa-focused banks and fintech equity research and venture investing teams. Welcome to you, everyone. Okay, so let's get into the conversation. My first question will come to you, Tosin and Tunde. Since we had both of yourselves on our panel in January, since then you've raised tremendous capital, expanded internationally, and your businesses have evolved quite significantly, building on last year's wins. Can you give us an update on what's been happening with your respective businesses year to date, where you're at on the fundraising front, and what you intend to do with what you've raised so far? We can start off with you, Tosin, and then over to you, Tunde.
All right, thanks, Soji. And thanks for having me again here. Since last year, we've continued on our growth trajectory, and basically also expanded to more countries like Cameroon and also like Ghana. Basically our focus right now is to continue our growth and, absolutely, make the impact we want to make in Nigeria and other African countries. We closed the Series B. We are also currently raising another round also to further expand many of the opportunities that we have seen. And, we're pretty much very excited about the future. Thanks a lot.
Okay, that's helpful. Over to you, Tunde.
Thanks, Soji, and good morning, everyone. Thanks for having us again at having Accelerex Holdings and be a part of this. So since we spoke in January, a lot has happened. Certainly one that is obvious is last year we were rated A- by Augusto, BBB+ by GCR. We're in a 20 billion board program in Nigeria. That's going on through the public markets. So we're excited about that. That 20 billion board program will be used to accelerate certainly agency banking, leveraging local debt, which is a faster way to manage the FX risk in Nigeria. Outside Nigeria, we have expanded, certainly everyone is aware of our operations in Ghana. We've moved east as well and slightly to Kenya, and looking forward to the great things that are going to be happening down in Uganda, Tanzania, and also Congo. So very excited about the lessons that we've taken from Nigeria to now expand our business footprint in agency banking, particularly, and working with acquiring banks in those markets. Thanks.
That's really good to hear. So fundraising, expansion, I think these are two aspects of what you're both doing, and that's across equity raises and also debt funding. So that's good to hear. Let me come over to you now, Olaolu. We are pleased to have you join us today. So thank you. For those who might not know too much about e-settlement, it will be very helpful for you to give a quick overview of your journey to date, your funding status, and where you're at in your evolution.
All right, thank you very much, Soji. I'm happy to be here this morning. Thanks for having me as well. E-settlement was set up in 2018, primarily to create access to financial services in peri-urban and rural areas. Typical financial services like your cash withdrawal, cash deposits, bill payments, and so on. But prior to that, I used to run a similar startup that was focused on acquiring merchants through MPOS technology. And what we noticed around 2016, 2017 was that, a lot of merchants that we had set up, especially outside of Lagos, were using our terminals that we had provided to receive payments for their usual purchases, they were actually using it to receive payments for, or rather to process cash outs. And that was mostly because they don't have enough banks in those communities. So typically you set up a merchant and you expect customers to come in and then they receive, payments. But instead they're just offering cash out services. And then we thought about that and said, hey, there's a problem here that people are using our technology to solve, even without our consent. So why not just go ahead and focus on that? And of course, that was what led to the birth of, PayCenter and setting up the company focused on providing access to financial services. Now, as of today, so far, we have over 70,000 agents. We process about $250 million monthly. We've raised about $1.1 million in funding, and we are currently on our Series A, trying to raise $20 million.
Okay, that's great. Before I come over to you, Elsa, perhaps I should give a quick opportunity to Tosin and Tunde, because I suspect some people in the audience might not know fully well what you both do. So if you could spend a minute just giving a high-level overview, what does TeamApt do? And also maybe some quick stats. How many agents do you have? How much do you currently process on a monthly basis in dollar terms? So we can start off with you, Tosin. Then Tunde, you can comment. You're on mute, Tosin.
Sorry about that. We basically currently, our mission is focused on essentially providing financial services to the underserved. That's the mission. And that's also because that's one of the largest untapped markets in Africa. A growing young population of people who have either no access or subsistence payment access or poor access to financial services. And a subset of this is cash in and cash out. And but of course, beyond cash in and cash out also includes many other kind of needs that the underserved people of Africa need. And that's what TeamApt through our MoneyPoint brand is focused on. Prior to starting MoneyPoint, we were one of the largest software vendors for Nigerian banks. And in 2019, we started operations and grew to become Nigeria's largest agency network by transaction value processed. Today, we process about $4 billion worth of transactions monthly through a network of 120,000 plus agents. And currently, we are looking, of course, beyond cash in and cash out. Like I mentioned, there are many more services that consumers and customers of Africa, including Nigeria, need. The people need access to convenient, affordable, fast, and reliable financial products, which includes from the basics of being able to deposit into an account, which means you need to have an account and be included, to being able to withdraw from it, which is cash in and cash out, which is also account opening, to credit products, to savings products, all sorts of services that people need to be able to grow their lives. That's what we're focused on. We have the goal to push and, we're both commercially and impact driven, commercial being the largest, of course. And we have the goal to, become Africa's largest provider of financial services to the underserved in the next 5 years. And we're lucky to already be Nigerians because Nigeria represents a good portion of the continent. Thank you.
Are you able to give a ballpark estimate of what you process typically on a monthly basis?
Yeah, so I think I mentioned we do a GTV of about $4 billion monthly today. Okay,
super. Today, do you want to give a quick overview of Accelerex?
Thank you, Soji. So Accelerex Holding is the holding company. We're global Accelerex in Nigeria. We have 3 businesses in Nigeria. Certainly, we have an MFP play in Nigeria. We have in financial services, we have an agent network, ANL in Nigeria, Accelerex Network Limited, and of course the payment business, global Accelerex. Our business, Accelerex Holding, has 3 pillars, 3 footprints. One is financial services, one is agent banking, one is payments, and related payment technology switching, etc. And our business is expanding on those three pillars and taking it country by country to build out what is necessary to address financial inclusion based on those three pillars. So in Nigeria, that may be payment first. In Kenya, that may be something else. In Congo, it may be something else. So that's really our strategy to find a melting point, a synergy between those three pillars to achieve the objective of making payments simple and easy and seamless for every African. That is the business goal. In Nigeria, I think if you think about it, we have over 100,000 agents plus merchants. Year to date, probably done in terms of successfully processed transaction, well over $2 billion. We have close to, I think, 3 to 4 million transactions on a daily basis. So when you think about the number of transactions that go through the systems, what we are focused on right now, when you think about post the bond I talked about earlier on capital raised in 2019, is a rapid African expansion. There's just so much learnings and lessons that we have discovered, worked well in Nigeria, that is now being taken into Ghana and taken into other countries. So that gives a rough idea of who we are and what we're about. We're institutionally backed by a private equity firm that has worked with companies that I've seen even on this panel at their inception. So we're glad about what the future holds.
Super. Okay. So Elsa, let me come to you now. It's a real pleasure having you represent MTN Nigeria today. You've worked with quite a few telcos across different markets. And for MTN, which is also active in fintech across many markets, how do you assess, first of all, the regulatory framework for telcos getting involved in fintech? And secondly, how does Nigeria compare, relatively speaking, across the different markets you've been privileged to look at over time?
So I think the journey of the telco entering the fintech space started like M-Pesa 2007, Orange, MTN, Airtel A1, around 2008, all the telco enter in some of the market into the mobile money space. What is very different in Nigeria is that the telco are excluded from the mobile money space. So specifically, the regulation forbid the telco to launch and lead the mobile money business. However, regulation has evolved, and after the introduction of PSB regime, this is the opportunity for telco to create via a separate entity that will be licensed by CBN and potentially to run also mobile money operation. So that's where we are today in Nigeria. So opportunity, we are going to match from a regulatory framework under a bank-led model, what are the possibility and potential that the telco can unlock when they enter the fintech space. Today, we already have an entity that has a CBN license. So MTN has an entity called YDFS with 0 digital financial services, and we have a super agent license. So just as MoneyPoint, First Money, OPay, we are rolling out agents that can process bank deposit, bank transfer, bill payment, selling airtime. So we are already into the fintech space under a super agent license, but eager to be able to run the PSB activity as soon as CBN will allow us.
Okay, sounds good. Thank you for that context. I have a question for the independent players on this panel. So as cash gets increasingly digitized into a stored value account, and issuing, acquiring, and smartphone penetration in Nigeria and I guess across Africa deepens even further, the question is, wouldn't your agent networks become redundant, right? How well do you think you'll be able to compete with digital-first companies in such an environment? But perhaps more importantly, how are you positioning yourself for that future today? We can start off with you, Tosin, then Olaoluwa, then Tunde.
Okay, thanks, Soji. I think it would be to think of what we're doing as not being digital is a misnomer. I think that TeamApt, for example, has some of the best engineering teams in the country, some of the best product thinkers also in the country. Staff payroll is heavily oriented towards digital. So I think the difference between digital first and us is we're both digital first. We, however, we're all digital. Let's put it that way. We, however, we also, however, have an offline distribution. And I think that's a position of strength than a position of weakness. The reason is because the demography that we all operate in is an informal demography where sales is mostly done through word of mouth and what people think about it, about the solution, than looking on the internet and making decisions based on that. It's a known marketing fact. So if you have any product and you don't have a last mile way to distribute this product, you will be locking out a very large, significant proportion of your market. And if you take a look at some of the most successful companies in Africa, including MTN and some of the large FMCGs, a large component of their sales, at least initially, started with a very, very well thought through offline strategy. So the way to think about it is more or less, these are digital companies. I know my friend Olaoluwa operates a tech company. It's not an offline clearing company. It's a tech company, but with an offline distribution strategy. Now, to also push this forward, so how do we see this evolving as cash become more digitized and digital store of value? I think, like Laulu mentioned, started a business doing merchant payments, and he quickly realized that the way people are doing transactions is basically buying cash, right? So in reality, the same processes and systems that you have built for agents is the same thing merchants use. It's an acquiring system that works with issued tokens. Either it's a card, it's a QR code, it's a transfer. It's simply the same acquiring systems that you have built. So if you want to say that, is there anybody who is much more positioned in the building to be able to take on the merchant acquiring angle of things? I think it's still ultimately the same processes, same systems, the same distribution network that we have all built that will evolve into the merchant acquiring systems of the future. So I think as cash is getting more digitized and people store more value in digital wallets, it means that people don't need to go through cash systems to make payments again. They can just go directly to merchants and present their card and buy what they need to buy. And what will happen is that most of the traffic that go to agents today will simply start going directly to the end customers, because what people do today is they withdraw cash, to spend the cash at merchant locations. So rather than going through that process, what will happen is people will just go directly to those merchant locations and make those payments. And it's literally the same set of products that agents use, that merchants use. To bolster that point also is that in as much that we all focus on agents, we are aware that some of our agents also use it for payments also. They could use that same point of sale to also accept payments for people that are buying goods and services. So I don't think there's anything to worry about that as cash gets digitized. There's a form of disruption that's going to happen in the space. I think it's still the same set of systems that customers will simply shift behavior from buying cash to using those systems to buy goods and services. Thank you.
Okay. And Olaoluwa, do you agree, or do you have a different opinion?
Yes, I agree, but I want to add to that as well. So in addition to that, we all know that, part of the reasons why the agent networks are thriving today is mostly because cash is king. So of course we offer a lot of services, account opening, bill payments, but we know that, of course, the most prominent are cash in, cash out. And the reason is because, because of, the way the economy is cash driven. Everybody wants to get out cash to be able to transact. So I think that over time, as cash gets more digitized, the businesses as well will continue to evolve, and then there's going to be a future where we actually have to evolve the service from being just servicing the agent to actually servicing the customer as well. But I feel like it's going to take a lot. It's not something that's going to happen next year or 2 years down the line, so it's going to be like a long process. But I feel like, it's just part of life generally. Things need to evolve. And I think that just as well, our businesses will evolve technologically as well to be able to make that migration as well. So thank you.
And Tunde, do you share similar views What's your thinking here?
I'll take a different dimension. I think those points have been well noted. There will always be a need for physical to meet digital. So every time we talk about digital, there needs to be a physical interface. And I think it was at a web summit 4 or 5 years ago that someone made that comment. And that's why IoT, things like that thrive in the market. But when you think of the other extreme, which is completely, digitized crypto type economy where everybody keeps that's the other extreme. Everybody's an issuer and acquirer. That is one extreme. But if you look at it from the agent's perspective and where we are today, the agents are serving a unique need. They are bank branches that don't need to be built. But beyond that, when you start thinking of a completely digital assets, type cashless environment, where the agent is no longer the broker of cash and carrying that cash as a, if you will, a tool of trade, then what ultimately will happen is those bank branches then become more economically viable, because now it will be addressing the real consumer need, not just it being a broker of cash. And I think that's the position of agent banking in the future, certainly on the continent of Africa. Thanks.
I want to hold on to a point that has come across in this particular conversation, to just take the conversation a little deeper. So considering that majority of transactions being done in Nigeria today across agency banking networks is cash in, cash out, implying that these networks are primarily serving already banked customers using human agents and not really merchants, as you've alluded to. How practically possible is it to leverage this human agent network to solve the merchant payments acceptance problem in Nigeria? I think Tosin tried to touch on this earlier on. And secondly, for example, the CBN has issued non-bank merchant acquiring regulations. Is this something you will consider, or can you do this under your current license? I think Tosin, you can kick off here, and probably Tunde, if you have a view on this.
Okay, thanks, Soji. All right. So, agents clustering is strongly related to commerce. If you take a map of where agents are present and superimpose it with the commercial hotspots of the countries, you see that agents align. Contrary to conventional opinion that agents are good for rural, it's not particularly aligned to rural. It's strongly aligned to commerce and lack of banks. So what this means is that you have agent presence in markets, and these markets can as well be rural, especially wholesale rural markets. Or you have them in spare part markets, or you have them around schools, or you have them around neighborhoods, essentially where transactions take place. And the typical use of these agents is people go to these agents to withdraw cash. That's because people don't want to carry cash along. So if you want to withdraw cash, if you want to do a transaction in that location, let's say you are going to a spare part shop to buy an engine, and the engine is going to cost you, say, 200,000 naira. You go to the agent location, you withdraw the 200,000 naira, and you go to the spare part dealer. Or sometimes the spare part dealer will follow you to that agent location and do that transaction. Or it's or maybe it's a grocery, a neighborhood, and people want to buy their daily groceries. They go to an agent location, withdraw 10,000 naira and buy their groceries. So, like I mentioned earlier, acceleration of or change of agents to merchants is simply going to be a position of where people's behavior now change. They now believe now that rather than go through the cash as an intermediary to do their actual end transaction, they can skip that step, save cost, and go directly to the merchant. But the problems today is the acceptance. Acceptance is related to the reliability of the products for merchants, as well as the costs it processes them, the perceived cost to that. You will see already in many urban areas, in highbrow areas, it's typical for you to have a point of sale. So it's for this same behavior to begin to translate down to the other non-so high class areas, and you begin to see behavior begin to change now from people going to agents to people going to merchant locations. So, and maybe agents will be disintermediated. Customers will not be disintermediated, however. because it's still, behaviors will simply change. But the good thing, however, is that this hotspot for any solid agency banking business already knows where to concentrate their efforts on. As you begin to move from agents to merchants, it's not something that's going to happen soon. I think there's going to be a need for some substantial infrastructure upgrades in the country for people to begin to trust it. There's going to begin to be some incentives in types of, say, pricing that will allow merchants to also trust it, because you will need to be able to tell your regular malam who deals with your everyday groceries that you can accept a payment of 500 naira, and you'll be able to access this 500 naira very, very easily. So it's when all the systems come in place, which a couple of years from now, that I believe that this transition will begin to happen. And I think, I think people like South Africa, with the likes of Yoko, are already there, where people, because they have a lot more ATMs in those places, but Yoko is making a lot of waves by, deploying merchant acquiring systems. And Nigeria is perhaps maybe 5 years away from that same scenario. So to answer the question, it's still the same hotspots that have the agents that will have the merchants. And that's a very solid proposition, because there's already word on the street about all these brands that provide cash in, cash out services already. So it's not a different product.
Okay. I'm keen to hear what you have to say about this, Tunde, because I know you're also quite active I was in Lagos a few months back, and I did come across a couple of Accelerex POS machines, at a bunch of restaurants. So I'm just trying to understand how you think of the practicality of converting a human agent network to solving the merchant payment acceptance problem, and whatever else you have to say about, this particular question.
Thanks, Sochi, again. When we came into the market at the 2010-11 timeframe, we only had one objective at that point in time: leapfrog the ATM, because we saw many lines and people who had cards who are just queuing up to withdraw cash. And at that point in time, the solution was deploy POSs to merchants, and that solved that problem relatively well. It doesn't mean those lines have been eliminated, but the second wave of the attempt of this financial inclusion was this concept of these human agents carrying these endpoints to be able to do transactions. And the real reason why acquiring banks at the time did not go directly to retail, SME, or the SMME to try and acquire them was because it was just not worth it. The costs were prohibitive, and it just didn't make any business sense. Times have changed. Now we have agent networks. We're engaging in giving agents these devices to go and do these transactions and benchmark them on that. So there is a convergence coming. I don't know when, but I sense it's coming. One, there's going to be education on the part of the consumer, asking that, why am I going? I'm not taking cash to the market. I'm going to an agent to collect cash from this agent to give to someone who is maybe 5 yards or 7 yards away from them. Some light bulb is going to switch on, and they're going to say, wait a minute, why can't I give the money directly to you? And that's going to be based on the fact that there's profit being made on that agent's part, that the merchants who is not acquired begins to think about and say, why can't I earn that income and also sell my merchandise? That convergence is coming. I don't know when, but it's coming, because education is going to happen on the part of the small to medium or even micro merchants, and they will then be geared for the next thing, which you touched on. There is a regulation now that came out in May on non-bank acquiring, and non-bank acquiring then makes the economies of scale of scope possible to address the mass market of those neglected or potential merchants, and see, is there a combination of those two things trying to converge into maybe a segment-based acquiring that focuses on the uniqueness of them and find means to make it economically viable. So we believe that will happen. We are well positioned for it, because on one hand, we do the agents, and on the other hand, we do the merchants, and at the right economic model, it may be worthwhile looking at those if you will, micro merchants and acquire them. Certainly, what to make it prohibitive right now is the cost structure, as I think Tosin alluded to earlier on. The fee structure may not be affordable, they may just not understand it. I've met with people who run major organizations in Nigeria and who have been able to analyze the cost of cash for them. It's costing them maybe 12, 13 basis points actually maybe even more, 12% on a monthly basis, just because they have all this cash to bank, and they just it's just not worth it. So at some point, some micro merchants is going to get savvy enough and say, how come that agent is making more money than me on my tomato paste, and he's the one that they're collecting cash from? Why can't I be the one also doing that? And I think that's where the convergence is coming. And lastly, what's going to make it possible is education. We know that the consumers are educated now. They know they don't have to carry cash around. The merchant education at the micro level will happen. And when that happens, those merchants will become agents. Maybe the non-bank acquiring will then have full scale. So that's my take on that, Soji. Thanks.
Thanks a lot, Tunde and Tosin. Coming over to you. Olaoluwa, did you have a comment?
Yes, I just wanted to add to that, that even as of today, we have like two broad categories of agents. So there is a category, which is maybe about 30 to 40% of agents that are actually proper retail outlets, like pharmacy stores or your grocery stores. And these guys currently, they have the agent banking business side of it as a side also, sort of. So they still do the cash in and the cash out, but they run their business as well. Now, in order to convert this set of agents is like pretty straightforward, because it's just about the value add to say, hey, you can do this as well. You already have the tools. This is just, how it's going to work for you. So that is very, very easy going forward. And then the second category, maybe about 60 to 70% of agents, the ones that we typically call like POS shops in Nigeria, and the ones that, are a bit tricky for now, but with time as well, they will converge at some point. Thank you.
Okay, super. I think that was the core point I was trying to get from all of you. So thank you for bringing the conversation to a good point. Coming over to you now, Elsa. So MTN has done an incredible job building out its agency network over the last 2 years in Nigeria. First of all, how many agents does MTN have, roughly speaking, nowadays? And how have you managed to grow that agent network so quickly in the last 2 years? And secondly, how does your agency banking proposition compare with what is being offered by the independent players on this panel, for example, or even the banks like First Money or Access Closer? So two questions in one.
Yeah, sure. So today, as YDFS, we have a base of 270,000 active agents. But remember, for MTN, we have about like 2 million retailers across the country. So we can fairly say that today, okay, we have onboarded like a bit more than 10% of them. Just to give you an idea of the potential and up to where MTN via YDFS could grow that network. And actually to some of the comments that were made, yes, mobile money, agency banking is first and foremost an agent network that then we transition to like cash in, cash out, less cash in, cash out, and that need maybe to be repurposed as merchant. But the first block to be put together is that agent network. So which agency banking allow? Where I want to react a bit to what has been said. I think there is a critical role in Nigeria as super agent player to move out of the POS technology. Such an incredible amount of money spent and so on to roll out POS to actually be able to do deposit and withdraw. Why as actor in this industry and why as bank we don't try to move to cardless? Why an app for the agent is not enough? Can we move to biometrics? Can you move to QR code? Why so much excitement to invest into those players and not try to? I think this is a challenge for agency banking. Can we move to a CapEx less intensive, OpEx less intensive model and evolve with technology that will be the one that will fit for Nigeria and move to more digital formats? So I think that's one of the things that as MTN we believe that we can play a pivotal role. to actually digitize more even the over-the-counter experience and the tool that the agent is using. So I think that would be one of the differentiating factors. Outside of that, I think there is most of the actors, and I think we can discuss, most of the actors that thrive on agency banking, they thrive on quality of service. If you ask an agent why do they prefer to take OPay, MoneyPoint, MTN, or the first answer that they give is the quality of service, and meaning that the platform is available, and also when I have a problem, my problem is quickly solved. So I think that's whereas all the players try to compete, and where we believe that also as MTN we can have a significant competitive advantage by mastering the communication and the connectivity that is provided to the agents.
Okay, I suspect some of the players might have some comments on this later on, but let me ask you a quick follow-up question, which is around the PSB license. So a lot of conversations around how important this is for MTN, perhaps how it would help MTN eventually launch some sort of wallet strategy, etc. So what I'd like to understand is, if you do not get the PSB license, and because of that cannot operate a wallet in Nigeria, what could you potentially do with the agent network that you've built out so far?
If we cannot get that license, we'll stay on that agency banking layer, which I think is sad. It's sad for the country because there is so much having worked with MTN in other countries, especially in East Africa, that can be unlocked from an economic perspective. Example given, Open API for mobile money API in Uganda is is thousand developer is really setting up a startup environment that become VC eligible. If you see what is happening in Kenya, most of it is driven by mobile money as M-Pesa API, and the most exciting startup and project go to Kenya because of mobile money. So as Nigeria having an enormous number of fintech already today, what would happen if actually we set up a mobile money environment bank-led, but with a license given to MTN and Airtel? I think it's a fantastic impact of the country. So it would be really a sad story if we don't take that opportunity to involve the telco into that space, and that will benefit to all the players, because even as an MTN wallet, you probably also go and withdraw on deposit at a MoneyPoint agent. So it's novel redistribution of value, innovation, so on, that is at stake here. So we don't we don't want to think about that scenario where that would not happen.
Okay, thank you for your points. But I want to also now come back to the independent players on this panel to pick on some of the good points you've made, Elsa. So one of them is around the importance of transitioning the technology, right, to some sort of lower capex type solutions. So what do maybe Olaoluwa and Tosin, what do you think about that point? But a second point which you could all also address, and Tunde, you could also chip in here, is what room exists for you to provide digital stores of value to customers at the last mile, either via a wallet or bank account? And if you were to do this, what does the execution path look like? Do you need new licenses, and how do you expect the banks to respond? So to summarize, a comment around the evolution of the tech, and secondly, your ability to provide digital stores of value at the last mile, whether via a wallet or a bank account. So maybe let's start off with you, Olaoluwa, then Tunde, then Tosin.
All right. So I think that, this is alluding to part of the things that I mentioned earlier about businesses having to evolve. As it is right now, yes, there's this heavy capex of setting up agents with a POS terminal. But of course, that same agent, at least for us, has a digital app as well, as a mobile app, as a wallet as well, and all that. And I feel like, so this is what we have now. This is what the market is requesting for. Also, do not forget that, the central bank and NIBs, they've spent a lot of money over the last few years pushing for cashless, and the major tool for that push has actually been the POS terminal, to say, okay, let everybody be used to this new technology back then of the POS terminal, and creating a lot of information and knowledge about what that technology is about. And I think that, that has helped define what the market is doing today, to say the most popular payment tool is still our card, despite the fact that, a lot of investment have come even in solutions like QR codes. There are like 3-4 QR codes technology that have been introduced. A lot of money has been spent, but still no acceptance. But the card still works. So I think that what it is that right now the card works. That is today's solution. But of course, it may not be sustainable long term, or even just like every other thing, it's going to evolve over time. But then as it continues to evolve, as a business, we need to be able to evolve as well, so that, we can keep, even through education, through the right marketing, and, gradually convert those agents into guys that are going to accept maybe some form of wallet solution, or maybe payment through OTP, or whatever it is, maybe through USSD and so on, that the future would bring, that can even make us go faster and break even faster. So I think that evolution will continue to happen. And, just like so many things, sometimes I think about it, and the point is that as a business, especially in technology, the competition you had last 5 years ago, are going to be different from the guys that are going to compete with in the next 5 years. So what that means is that you can't keep doing the same thing every year. So you have to keep evolving. And I think that right now, there's traction, fantastic, but then we can't sit on that. We need to keep thinking and saying, what is next? What is next? How do we move to biometric? As an example, can we get rid of the POS and just use maybe like a fingerprint device attached to a phone, and then be able to still access my bank account? So we need to keep thinking, we need to keep moving, and I'm sure that, eventually we're all going to crack it.
Okay, Tunde, what do you think about this?
So I'll touch first. Thanks, Soji. I'll touch first on the CapEx side of things. So one of the things that I said earlier on, that there will always be a need for physical to meet digital. And so when we talk about these different instruments or acceptance methods, we always say that there's going to be something at the endpoint. Something that is going to be a physical medium at the endpoint. So when we talk about CapEx, there is really about the costs of what it takes to set up and operate that physical thing at the endpoint. Cheapest thing, no doubt, is if we can have some feature phones on both sides. That's simplest cost structure. But that said, the existing rails in, for example, markets like Nigeria that are well dominant like card, and tens of millions of those issued, the use cases and consumer behavior is there. So continue to use that and explore all the options, whether it's QR, etc. But focus more on the CapEx cost and find a way to make that reduce that CapEx cost. Because at the end of the day, the whole idea is solve the problem for the consumer and run an efficient business. So I think those two things should be treated separately. In fact, in finance, investment is different from financing costs, is what you experts always say, Soji. So I think if we find a way to, because when you bring about biometric and all those other things, I mean, we've explored all those things. We supplied biometric devices to the financial service industry through NIBS. And we know the costs are not just the cost to acquire, cost to operate them are very high, much higher than the POS. So right now, the lowest denominator in terms of what it takes to operate effectively in Nigeria, we all know today is a POS. And as manufacturing improves and cost reduces and players, that thing will come down. So that's what I have to say on that. So essentially, find whatever technology works at the least cost structure and provide it and solve the problem. That's the summary there. On the wallet side, there are so many institutions in Nigeria. So while we have an MFB in our portfolio, we think there are a lot of institutions that can be partnered with, and we really are grateful for what the regulation is doing, CBN, in terms of encouraging regulated players, whether it's the tier 1, tier 2, tier 3 banks, or even the MFBs, to start embracing this digital life, holding digital store value. So I don't think the real challenge is trying to find something else. I think it's trying to find people who can do it well and give consumers the ability to be able to leverage whatever store value they have, whether it's with the big banks or with an MFB, to be able to engage at a point of acceptance, whether it's an agent or merchant. So we're not trying to reinvent another place to store value. We want to just make it possible for consumers to be able to do what we all want them to be, financially included and engage in digital transactions. So that's my take on that. Thanks.
And Tosin?
All right. I think that a way to look at how to push product is what customers want, but it's quite tricky also. Sometimes customers don't know what they want, as is a famous saying that during the era of horses, if you ask customers what they wanted, they will say faster horses. So what this really means is, I think there is something in alternative methods of payment aside point of sale. And one of the biggest things, of course, the challenge is around habits, but oftentimes the innovator is the person who sees that thing that is not so obvious to everybody, takes advantage of it and moves forward. And I know that the future is one in which I don't think that POS is the future. I think it's something else. That's something else. We need to find it. Maybe MTN is looking at it. Who knows? Maybe we are looking at it. Who knows? But I think every business needs to already be taking a look at. And for me, the problem is not capex. I think if it was capex, it will not be growing. We are financing it anyway, and nobody will finance it if you are not profitable. I think the problem is a problem of a fundamental convenience for the customer, security for the customer, whatever it's going to be, but it's not the customer that even determines that thing. It's the innovator figuring that next thing out. And I also totally align that something that is purely digital is almost always fundamentally better than something that is offline. Offline, however, should just be seen as a distribution network to ultimate digital. Amazon is far bigger than many people, but of course, they're also coming offline now too, but they started online first. And I think that's a parallel that most people in the industry, or especially investors, use to look at industries generally. So what my summary is essentially, it's figuring out what that thing is in the case of Nigeria. If it's going to be and I don't think it's going to be point of sale forever. On wallets, I think that it's similar to what I also said. It's figuring out the what customers really want, and it's not necessarily what they say. They will say that they want it cheaper, they want it faster, they want it easier. And I also think there's a large opportunity there also, aside the clear one that there are 40% on banked people. And even of the 60% banked guys, tons of them are underserved. A proxy for being underserved is the fact that it is an agent location. Right. So I think also that there's an opportunity there that many people, including the people in this room, are going to capture. And I think that the future is going to be certainly different from what we know now in terms of players and the kind of products that customers will use to access their money. Thank you.
Sounds good. Thank you all for your comments. I want to touch on one of the interesting things we learned when we were in Lagos a few months back, which is around the price war going on in the agency banking space, particularly with fees taken by super agents being reduced quite significantly to incentivize the use of your POS machines. I would really like you to tell us a little more about what exactly is happening with respect to this price war and what the end goal is, and how are other players responding. I would like you to start off, Tosin, and perhaps you could comment on this as well, Olaoluwa and Elsa.
I would say it's more of a tough war than a price war. I think that inevitably there's a mutually assured destruction scenario that everybody's aware of. And since we all have similar economics at the end, and also it's not like pushing extra money into this particularly has a significant effect in making you gain your market share. I think what everybody is literally doing is more or less trying to grow and protect their turf. And what this means is in a couple of months or even years from now, everything will stabilize to what I think will not be too far from what it is currently. That's because there are fundamental costs everybody bears on processing, and these costs are literally some of the lowest already by world standards on interchange fees. So this is not like maybe Nigeria is expensive. Nigeria is cheap compared to South Africa, compared to in Senegal, you have charges as high as 7%. Well, before in Europe, people pay far more. So Nigeria is cheap. This cost already as low as it could be. And I think it's a tough war of people trying to grab shares. And I think maturity is already coming to the industry. So in a couple of months, I think it will change. The reason is because if you drop your cost for an agent, your competition can drop their cost too in 5 seconds. And it's not going to make, the agent is not going to leave that platform if the cost is not different like that. So it's a mutually assured destruction scenario where it's a tough war of who is going to, like, just don't take my agent. It's not a case of I want to poach agents now. It's a case of just don't take my agent. So, and I think it's things like that will generally stabilize as is expected in a couple of months or maybe a year or so from now. That's what I see on top 4. However, the business itself is evolving. We know merchant payments is coming. We know digital banking services for customers are also coming. There's a possibility that POS will not matter anymore. The fact that QR code is not growing does not mean it doesn't have the potential. It might simply just be that an innovator has not figured it out properly. So that's essentially what I think the future will look like.
Okay, great. And Olaoluwa, what are your thoughts on this price, or should I say tough war going on the ground?
No. I'm going to keep it a price war because there is a price war actually, where players are actually slashing prices just like you suggested. But for us, we are not fighting that war. So we're actually trying to stay away from the war. The important thing for us is that our prices should be competitive. And just like Tosin said, the gap shouldn't be that wide so that you want to drop this service because the other service is significantly cheaper. So we just want to make sure that pricing for us is competitive, and then we focus more on emotional buying with the agents. Making sure that we are part of the agent's lifestyle. And working with the data we have to know that these agents as kids, and he would need money for school fees because schools are about to resume, and making sure that we are there as part of his lifestyle. He wants to get married. We are there for him, and whatever it is, just tying in into that emotional point of view, because we feel like that is what can, make us win long term, and not necessarily, who has the cheaper fees. So that is how we're looking at it, and that is what we'll continue to do. We'll continue to build loyalty from the agent point of view.
Okay, sounds good. Elsa, did you have any thoughts on this? Does it affect MTN in any way?
Price. I don't think it's a price war neither, right? It's a market auto-regulation, because at the end of the day, it's the agent that decide the price of the customer. So yes, as agency player, you can compete on how much you debit from the agent account, right? But is it like fundamentally the number one criteria that make an agent use the POS given by MoneyPoint or the POS given by OPay? Not all the time, and there's other criteria. I talk about quality of service, turnaround time. I think there is it's not just driven by the price at this point in time in the market. And yes, I think on the longer term, the price will, as competition increase, it will tend to keep decreasing again a bit up to the time that you are tipping point on the actual cost of the transaction. So there is still a bit of space for the market to decrease the fees that are charged to the agents, but not that much. So, which is at the end of the day is good, right? Because it becomes more accessible for the customer. The agent can decrease also a bit what he charges, and I think it's a good thing, but not a price war, rather market regulation.
Yeah. Okay. Let me stay with you, Elsa, because when we went around the markets in Lagos a few months back, a number of MTN agents told us they didn't have POS machines to facilitate cash in and cash out, as the cardless withdrawals didn't seem to have taken off, as dramatically. So they often use the POS machines of other players like banks or independent players. So how will MTN solve this problem, for your agents? Will you be deploying POS machines? Or what's your thinking around how you solve this problem?
Oh, look, here is my take on this, and I think that's why it's an industry type of question. If the banks keep distributing card and that they keep pushing a card-driven model, there is little possibility. An OPEC rate at some point, I don't know if you remember, like in January, in city like Ibadan is covered by QR code and so on, MTN has tried also. And if the bank don't join the party in trying to push a cardless model, it will be very difficult not to keep competing on this. So for MTN, the POS question is still open. We are still trying a POS-free model because we believe that all agents already have a smartphone. So why can't they serve all feature phone? Why do they need an additional machine to serve the client? There is a lot of inefficiency, even for the agent himself, right? So you need to charge now the POS plus his phone plus this. You need to buy the paper to put into the POS. From the agent experience, it can be improved. So yes, so we're looking at it and seeing as all the industry will evolve in a few years to decide if we should move to the POS model temporarily as the market evolves.
Okay, sounds good. Thank you for those comments. And this is my very last question to Tunde and probably Tosin or Olaoluwa. Since all the banks can use the entirety of your network to service their own customers, how do the banks optimize this network for themselves? Let me give you an example. Say there's an unbanked person in Kogi State who wants to open a new bank account or take out a loan. Which bank's product will that agent offer to this unbanked person? And how well is the CNF platform working in the back end to serve all the banks and what you're looking to build on your own platforms? You can kick off Tunde and Tosin or Olaoluwa, you can give a final comment.
Thanks, Oji. So I think what is eventually going to happen there is going to be based on incentives. Today, again, we run bank neutral agent networks, and those agents should have the flexibility of offering products and services that work best for their consumers. And when we think about, and I must commend the effort by, again, the central bank and the regulators and also SANEF and its management, the effort to try and bring things together and bring some structure to how the agency network is evolving in Nigeria. But that said, an agent ultimately would look at incentives. If I'm a bank A and I offer an activation cost, let's call it a customer acquisition cost that is more attractive to an agent, then that may be the offering that's available. Let's say a consumer wants a bank account that offer lending immediately because they are an artisan, and that is something that is viable for an agent to offer, then that becomes more attractive. But again, it's like an insurance broker. I tell someone, when you're trying to buy life insurance, and even if it's your friend selling it to you, make sure that you understand the incentive structure so that they're not selling you the worst policy, even if they're your best friend. So I think ultimately that's what's going to happen in the market. The agents will determine based on whatever pricing is best incentivizing them and also suits the need of the merchant. And SANEF is bringing that administrative focus on that.
Okay, I see Tosin, you have a comment on this?
Well, I mean, I'm basically agreeing with what Tunde said about SANEF having a, I mean, that's basically what SANEF was set up to do. It's to create a shared agency network and, fund it towards advancing financial inclusion. And I think they are doing a good job there to ensure that everybody, we have a shared agent network. However, I think I should still mention that there are some level of influence that agents and agent networks have on the choice that customers make. And Nigeria's problem is a distribution problem. And whoever can crack distribution problem with a solid product market fit, I think is going to unlock a new paradigm. And I could mention that that's something that ticks our fancy. Thank you.
Okay, Olaoluwa, did you have a comment?
Yes. So just to add to that, Tunde and Tosin are very correct. But I think that the first level of the conversation from the SANEF end, after SANEF, is actually the super agents agreeing terms with the commercial bank to say, okay, I'm going to work with this bank. And then those offerings with the agreed banks are then what you offer through your system that your agents can then pick from. So I think that I just wanted to add that, but yeah, it's pretty much on point.
Okay, sounds good. Look, this was a really insightful conversation, and I would like to thank your panelists for all your comments and your time, and the audience for listening in. I hope you continue to enjoy the remainder of the conference today. Thank you, and take care.